Imagine walking through a busy marketplace more than 400 years ago. Merchants from different countries are negotiating deals, ships are arriving from distant lands, and valuable goods like spices, silk, and precious metals are changing hands every day. But hidden behind all this activity is an idea that would eventually transform the global economy forever: the birth of the world's first stock exchange. The story begins in the early 1600s in the Dutch Republic, one of the richest trading nations of its time. International trade was booming, but overseas voyages were extremely expensive and incredibly risky. A single expedition to Asia could take years to complete, and storms, pirates, or disease could wipe out an entire investment overnight. To solve this problem, Dutch merchants came up with a revolutionary idea. Instead of one wealthy investor paying for an entire voyage, many people could each contribute a smaller amount of money. In return, they would receive a share of the profits if the journey succeeded. This concept of shared ownership dramatically reduced individual risk while allowing much larger trading expeditions to take place. In 1602, the Dutch East India Company, also known as the VOC, was officially established. It became the first company in history to issue shares that could be bought and sold by the public. No longer did investors have to wait until a voyage was completed. They could sell their ownership to someone else whenever they wanted. This simple innovation created something entirely new: a secondary market for shares. To make these transactions easier, traders began gathering regularly in Amsterdam. Over time, this organized meeting place evolved into what is widely recognized as the world's first official stock exchange, the Amsterdam Stock Exchange. Here, buyers and sellers negotiated prices based on expectations, news, and future profits, rather than just the physical value of goods. The atmosphere inside the exchange was energetic and unpredictable. Traders shouted prices, negotiated deals, and reacted instantly to news arriving from distant ports. If reports suggested that company ships had safely reached Asia, share prices often rose. If storms or wars threatened trade routes, prices could fall just as quickly. Human emotions like fear and greed became powerful forces in determining market prices, just as they are today. The success of the Amsterdam Stock Exchange quickly demonstrated the power of organized capital markets. Businesses could now raise enormous amounts of money from thousands of investors instead of a handful of wealthy individuals. Investors gained opportunities to build wealth without directly managing businesses themselves. However, not everything was perfect. As more people entered the market, speculation also increased. Some traders bought shares simply because they believed prices would continue rising, while others spread rumors to influence market sentiment. Market volatility, speculation, and financial bubbles, issues still seen in modern markets, were already beginning to appear over 4 centuries ago. Despite these challenges, the stock exchange fundamentally changed the way economies functioned. Governments, entrepreneurs, and merchants realized that public investment could finance projects on a scale never before imagined. This system helped expand global trade, encouraged innovation, and accelerated economic growth across Europe. As decades passed, the stock exchange model spread beyond the Netherlands. Other financial centers such as London, Paris, and later New York established their own exchanges, each contributing to the development of modern financial markets. The basic principles remained remarkably similar. Companies raise capital by selling ownership, and investors trade those ownership stakes in organized marketplaces. Today's stock exchanges use advanced technology instead of crowded trading floors. Orders are executed in milliseconds through powerful computer systems, and investors can buy or sell shares from almost anywhere in the world using smartphones or laptops. Yet the core idea remains unchanged from the one first introduced in Amsterdam in 1602, allowing people to invest together, share both risks and rewards, and create opportunities for businesses to grow. The history of the world's first stock exchange is more than just the story of finance. It is the story of innovation, trust, cooperation, and human ambition. A simple idea born from the need to fund dangerous trading voyages laid the foundation for the modern global economy. Every stock traded today, whether in New York, London, Tokyo, Mumbai, or anywhere else, traces its origins back to that remarkable innovation in Amsterdam more than 4 centuries ago.